Hey, good afternoon, everyone. Chris Lopez here. And I want to welcome you to our webinar. We're going to be talking about the business plan and the vision of Property Llama. And that is really to take Property Llama and turn it into the real estate investors platform for planning all their real estate needs, but monetize it and pair it with real asset private equity investing. So before we get into details, I have to go through the standard disclaimers and forward-looking statements. We are going to be talking statements, growth, numbers. Make sure you sit down with your professional team, understand it, review it. Reach out to us for any details. We're happy to share. And also understand that we are not making offers or soliciting money on this webinar or investments. We are presenting the details. I'll make sure you have the information so you can make the appropriate decision. All right. So I've got two amazing people in the room with me who are integral parts of Property Llama to execute this and the vision. The first is Richard McGurr. Richard, how are you?
I'm doing really well. How are you, Chris?
Doing fantastic. I've been so excited for this day for a long time.
2 years.
Oh, I know. Second person studio, Christopher Lawhead. How are you, sir?
Better than good, my friend.
Yes. So we got two Chris's. So Lawhead and Lopez to keep things simple here. Anyway, we all have lots of experience in tech and real estate investing, private equity, rental properties. We'll talk more about ourselves throughout the story, but this is stuff that we eat, breathe, and sleep. We literally like texting and slacking at 6 a.m. or 12 p.m. And we all have that same tenacity, that same vision. Well, we all have our own strength and skill sets that makes it such a great team here, along with a lot of other people that are not on the screen right now. All right, so actually getting into the details here. From a high level, what is the problem in the marketplace? What are we solving out there? The problem is that there are no real estate financial planners. And this became clear to me years ago when I started investing myself. And then I've talked to hundreds of clients and thousands of potential investors out there. They've all said, hey, do you know anyone that can go out there and help me do real estate financial planning? And for those who have been with us for a while, you have seen us evolve into really starting to offer the services. And what Property Llama does is that grand solution to what we've been working on for the last, 6-7 years. All right, so problem number one with no real estate financial plannings is that it's just like death by a bazillion spreadsheets, and the spreadsheets have 20, 30, 40 tabs. Spreadsheets get broken, they get confusing, and it's just very hard to do any like long-term modeling other than, hey, let me buy this property. Lawhead, how many spreadsheets have you done over the years?
I've interacted with hundreds, if not thousands of spreadsheets, and I've probably broken hundreds, if not thousands of spreadsheets. So I can appreciate where this is coming from.
Yeah, and I'm sure you guys out there can have relate to the same issues. The second one is there are no advisors, no humans to go out there and talk to when it comes to saying, hey, here are my goals, here's my situations, here's my cash, here's my portfolio. What do I do with it?
Well, I've looked for them, right?
Yeah.
And I have great financial advisors and I know brilliant people. But when I diverge from stocks, bonds, mutual funds, equities, they can say nothing about my portfolio. And where I've built my wealth is my real estate portfolio. So I don't have that professional help as it sits, and I've looked.
Yeah, well, that's what we're creating right now.
That's right.
All right, and so this is like the ultimate goal of Property Llama as a platform as a whole. What you're seeing on here is a screenshot, and it really is just showing an investor's portfolio simplified. I think so many of us are used to going on to, one of our stock platforms and just this amazing dashboard you pull up on your phone, your laptop, and it's just, real-time data. It's simplified. It's all there in one spot. But do you have that in real estate? No, you don't. It was death by spreadsheets until Property Llama. So Property Llama, this is the investor dashboard that brings everything together for the investor and also the investor's team, their realtor, their lender, their CPA, whatever. They can all plug into one place and see all the data. And then we talk about like, what do you do with it? And so this is just a couple of quick screenshots on here where in just as little as 3 clicks, we can do some very quick modeling of like, oh, what if I took this property I bought 8 years ago and has a bunch of equity, sold it, and bought another rental property? Well, that is 1, 2, 3 clicks. And this is actually a real screenshot from a client of ours. Obviously, all the data has been anonymized. But if you look at the right-hand graph there, through one property transaction, selling something and buying something else via like a 1031 exchange, we were able to help that person achieve their goals about 15 years earlier. If you see that blue line going up, that's their as-is portfolio with no moves, no optimization. That yellow line is if you sold this and bought this, what would it do? And that red line is the person's cash flow goals. Well, now that person's getting there in about 10 years versus 25 years. So that is the power of this for high-level modeling. People see, I could do this and do this.
And we're the only tool on the market that does this,
Yes.
especially at a retail level for normal investors like the people here at this table.
Yeah. Well, we built this because I need it for myself. I was like, what do I do here? Let me go build an ugly spreadsheet. Then let's build something better.
Yeah.
And then luckily, Richard McGurr walked in my life. It's like, hey, I can actually go out there and do this. He is the tech guy behind the scenes on here. All right. So let's get really granular on here, because I'm sure a lot of you already can relate to this, because you guys are real estate investors out there. But, let's put ourselves in the real estate investors' shoes, because ultimately that's what matters. Hey, let's get down to that client level, that customer, that individual level of someone else sitting behind their screen or trying to figure out what do I do when they don't know what to do. So we're going to share a story of Matt Amundsen, who's actually a musician turned real estate millionaire. And this is one of your, best friends, right,
Yeah.
Lawhead? So, who is Matt?
He's a great friend of mine. I've known him for many years. We've partnered on deals. I met him. He played drums in an orchestra where I composed a big band piece, and that's where we met. And he's actually the reason I'm sitting here right now. So he put his content, his data into Property Llama, analyzed it, and said, I'm getting out. I'm getting out of all my rentals. And I'm like, what? What? And so through this tool, he showed me, I'm going for this yellow line, Chris. You're stuck down here at this blue line. And it took a little prodding, but after he convinced me of the value of this, well, here I am, right? And so he and I have been coming up together as real estate investors, and now we're both, real estate investors in private equity funds that have exposure to, institutional grade real estate deals.
And so, Matt's the perfect success story out there. Someone he was smart enough and took the action to go out there and buy rentals, made a lot of wealth that way. But I was like, hey, now what? The market has changed. My life has changed. And he put his properties into Property Llama here. And he was gracious enough to allow us to share a screenshot of it. And you can see here, hey, this is what he saw. And of course, he really dove into the software, used the prompts, user education to figure out what to do, as Lawhead shared. And then this is actually just about 10 days ago that he sent this email. We're like, hey, can you just summarize what happened over the last year? And, Lawhead used to be a lender. I've heard you guys are good at numbers.
Yeah.
Are you able to do mental math or break it on a calculator?
Oh, goodness. Give it to me.
All right. So I'm going to read this here. I'm going to give you guys this context here. So in July of last year, Matt came to a webinar about Ironton Capital, which is a private equity real estate firm. Came there, invested $100,000 into the first fund. So 100K.
Got it.
Lawhead. Third, attended a webinar about Property Llama, and that was our portfolio analysis mastermind for those that may have attended it in Q4 last year as well. Put his properties in there, went through the numbers, and realized that he was going to take his cash and sell 2 properties in 2023 and exit the other 2 in 2024 to invest passively. So October rolls around, $50,000 into passive again. Then November, $100,000 into another passive deal. In January, he restructured his HELOC, reevaluated his position, and then took out another $200,000 to invest in 2 more deals. Step 7 there, he took 2 of his properties that he mentioned earlier, and they sold in the springtime. Got them fixed up, listed, sold. And then he's got the numbers there for what they sold for and how much cash he walked away with. And then with those proceeds, he took another $100,000, $100,000, another $65,000 to invest in more funds. So altogether, in approximately less than actually 1 year, this man went through, and he is like on the leading edge of what so many investors are doing. And you see the transition he made.
We talk to someone like this every week.
Yes. So what was the total amount?
Oh, you lost me.
Doing math there.
I got it.
715.
715,000.
Bam.
So approximately over $700,000 through the Property Llama platform helped him understand what his portfolio was, helped him understand what he needed to do to make real estate work for his goals, his family, his life situation, and he started making the moves on there. Not only that, he explained it to Lawhead over here, got him on the train, right?
I mean, he's the reason I'm sitting here.
And now you're sitting at the
And
seat.
so I'm exiting 3 properties personally. I'm following his lead because, again, you know, you might have bought a 7 or 8 cap 10 years ago, and it's now a 2 or 3 cap, right?
Yeah.
You've got all this stale equity. I mean, I have a tremendous amount of stale equity in 3 deals, so I'm exiting those 3 deals. And where am I taking them? I'm taking them to Verico. I mean, full disclosure, I'm investing in the deals that we are working on.
I think we actually have a model of one of these very common properties that a lot of investors have on the next slide.
Oh, here we go.
Yeah.
Okay.
So this was one of Matt's properties.
Yeah.
So pretty common. He probably bought this 6 or 7 years ago. Back then, he bought it at a 6 or 7 cap, and that a lot of investors, and I was guilty of this as well, permanently market in their head as this is a 6 or a 7 cap. Then through Property Llama, they enter the new data with the new rents, the new valuation, your current loan position, and oh, this is a 3.87 cap. This is a low performing property with a lot of equity. I need to sell this thing.
And literally, this is Willow. That is one of the properties he sold in line 8 there.
Yeah.
Because he saw, hey, I can put this equity to better use, get a better return, and simplify my life. And so this is exactly what the Property Llama platform does. It takes all the information that people need, help them figure out what to do with their real estate portfolio.
And we do this day in and day out.
Yeah, like it's and this is like the exciting thing here. Like now we highlighted Matt. Again, thank you so much, Matt, for allowing us to share your story. But there are millions of Matts out there. And we got a graph here that just shows the amount of equity that real estate owners in general are sitting on. And you can see since 2012, 2013, it's just been an epic growth there of equity, over debt, which is, value over debt, which is their equity on there. And what happened, I think we all realized that the appreciation party is over. That ended about a year ago once the interest rates started kicking up here. And now it's just going to be flat and choppy for a little bit, right? Not bad, not good. That's the market.
I'll take my 200% returns. We had a good time.
But a lot of people like Matt saying, hey, I want to keep investing in real estate. What do I do? And here, and then what happens is that all these people have been very attracted to Property Llama, Richard.
Yes. Yeah. So lifetime, we ran these numbers a week ago. We have over $1 billion. So this is $1,043,645,000 in property value in users' accounts. So this is when you come on, you create your portfolio. So that's the value of all the property. And then just last month, people added 37 million in rental properties and with 22 million in equity. And there's a little hint there. That's a very high amount of equity compared to the value of the rentals.
But that's like this graph up here. Yeah. That's just the numbers version of that graph.
Yeah. And so that is equity that needs to be repositioned. And that all of this right now is just organic growth. We have a lot of virality, which we'll talk about later, of users inviting other users and sharing their portfolios and stuff like this. And so we're at the point where the people that are signing up for the platform today, we don't know. Like the tool is catching on, the tool is getting out there, and we know everything about these people. Like we know their addresses, we know their loan balance, we know their returns. It's just a gold mine of what we call first party data. So yeah, here's some totals. Rental portfolio value, 800 million. I'll just go through the highlights here. If you include the primary residence, then that gets us to the $1 billion. Now the averages are where it's cool because this thing is a millionaire magnet. So the average rental portfolio value for a user is 1.7 million. Now that is clearly coming from some skews of about 1 in 20 users has a massive portfolio. And then your average is more, I guess you could say your median is more of like an $800,000 portfolio, but all of these people are very high net worth, very high income, and love investing in real estate and like care passionately about driving returns and managing their portfolios. And we're the only place where they can get this done.
And so kind of going back to these investors, the Matt, the other millions of Matts out there, all these people that are organically being attracted to Property Llama, is they're trying to figure out what to do. And, the last, decade, the name of the game was, hey, buy more rentals or refi and buy more or sell 1031 trade up. The issue we have right now is we have very strong headwinds against rentals. What happened with interest rates there, Mr. Lawhead?
I mean, interest rates have obviously skyrocketed, and you just can't get a deal like you could 10 years ago. It's that simple. And so people often get what I call 1031 derangement syndrome, where they're just so hell-bent on getting a 1031 exchange done that they're buying a bad deal. And everybody in real estate has seen that. They've seen their friends do that. And that's where the private equity option comes in, where you get a exposure to an institutional grade investment in a private equity fund focused in real estate.
Yeah.
Right.
And that's actually what we're seeing about here is talk about, because you can go out there and buy rentals directly, or you can go out there and, invest your money into private equity. What are we seeing right now just in terms of like opportunity returns between those two markets?
Well, listen, so I was comparing for my personal money. I was comparing doing a multifamily deal, of which I've done over the last decade. I've done, many apartment buildings, and I could go guarantee the debt. I could raise the money. I could manage the subs. I could manage the GCs. I could do all that work and make approximately 17% IRR, right? Or I could do none of that, exit my equity from my current, gather my stale equity that exists in my current portfolio and apply it to one of these private equity deals managed by top tier sponsors who are better at it than me, right? Absolutely better at it than me. And I do as well, if not more, without the headaches, without guaranteeing the debt, without managing the subs, without any of that, headache. I want to be at that yellow line.
Yeah. Well, I mean, that's where the trends are going. And to wrap this all up, this is the market opportunity from like a global macro view out there that we are seeing. Like this passive investing wave, this is the next mega wave. This is the next mega wealth transfer in real estate. And we are just on the early trend of it going. I think it's a great time because we're not at the infancy. We're at the very early stage of it. And you look at the next 10 years, this is where people are putting their money. This is where people are going to be selling rentals like Matt did, like Lawhead. I'm selling one right now myself. Like so many people are doing, they are doing this transfer. And so we are poised to go out there and help people understand their portfolio, make the moves, and also help them invest their money. And Richard, you did some calculations on here. And from a pure business model, why are people so excited from a business standpoint about the private equity?
Well, okay. So I think private equity is a highly scalable model, especially if you do it like we do, where we're really focused on capital raising and capital placement. And so basically over the lifetime of a fund, a private equity firm doing a deal like ours will earn about 24 cents in fees over that 5 years for every dollar raised. Now that's through management fees, which is every single year we charge 200 basis points, 2%. And then at the end, we get a portion of all of the profits over return of capital. Yeah. And so you get roughly by the modeling about half of that in fees over the 5 years. And at the end, the other half you get in a big pop. Yeah. And so it's just extraordinarily profitable. And that this is delivering well above market returns to your investors. You're talking like the 17 to 20%. Everybody wins.
And then up to this point, we've had lots of success the last, number of years, and people said, how have you done this? How have you scaled? And, we are always like to break things down into, hey, here's the formula, here's the process, here's the steps, because to go out there and repeat it and scale it, you have to break it down. And there's really three main pillars of skills that we have focused on. One is mass media. And I think a lot of you guys on the webinar know, hey, the podcast, the events, the books, the webinars we do, we're out there. We do a lot of educational media to help people understand, hey, what's in the market? What opportunities are out there? What do you do as a real estate financial planner to go out there and move your properties to make them work for you? The second part is tech. And that's the property Llama component on there, where everything is stored in there so people can see up to date. They can easily share it with their team. They can go on there and do modeling. And those two things just give us massive scale, because it's not a spreadsheet I have to email you, Lawhead. It's not a one-on-one presentation I have to sit down and repeat myself 1,000 times to explain to you, Richard, how to do your portfolio. And then you mix that in there with real estate private equity of where, hey, rather than doing 200 little deals, we can do 1 or 2 big deals. We get massive scale this way. So these are just 3 critical components to how we have scaled and what we're going to do going forward as Property Llama is growing into a robust platform to help real estate investors out there. And I mean, you know, in terms of just growth, this is a great snapshot of the media side out here. It was actually about 6 years ago. I became a realtor in Colorado, started investing myself. I started getting serious about investing, I would say. And I started the Denver Real Estate Investing Podcast. And that was the flame that kind of got the whole fire going and being able to like learn and network and do deals. And then it led to just amazing growth at Envision Advisors, which is my investor-friendly brokerage team. And, you know, we're well over 300 million in sales since then. And actually our growth has not slowed down that much compared to all the other realtors out there because it's an amazing market. And we have the mass media, we have the tech on there. And then what happened a couple years ago was, hey, opportunities started changing. Hey, where's the best opportunity? Because I want to be very clear. Everything we do is with the investors in mind. We're investors ourselves first. Hey, what do we need for ourselves? What do we need to look at? What do we need to do out there make sense? What do our clients need? I've been a broker. Lawhead's been a syndicator and a lender for many, many years. What do our clients need? And then, hey, how do we go out there and deliver it and build it? So we're always looking for what the best is out there. And then we adapt with the trends and we ride those trends to make ourselves and our clients and our friends, hopefully a lot of money. And so as things started shifting here, it was actually about a year ago in a week, Ironton Capital officially launched. We had the great privilege of helping it launch. We really focused on the capital raising front, the tech front, and helping get the message out there. Well, in 1 year, we raised just over $43 million. And that was from a cold start in a very rough market environment. So $43 million in 1 year. And in 2023, over half those funds have been raised through our own channels. So another great hey, we've done this. Here's what the platform, here's what the opportunity does. Here's more results. Here's more traction that we have. And then, you know, another person that's been so key in like my evolution and helping so many investors go out there and have success has been Terrence Doyle and his company, the Verico. I know a lot of you guys in the webinar know who Terrence is, but I met him like 5-6 years ago, actually through Bigger Pockets Forum. And he was in his flipping days, flipping dozens of properties a year. I was beginning days of becoming an investor-friendly broker. We kind of became gym buddies. We would sit there, we do a deal here together. Mostly we get together, have coffee, talk shop, and hold each other accountable. And it's just been an amazing relationship. I've got to see him grow. And then 3 or 4 years ago, he stepped out of flipping and focused on raising money to bigger apartment buildings, doing bigger deals, started raising money to do syndications. And then I was able to go out there and help him network and grow through media we did, through connections. And I got to see him grow. And I started doing it. I said, oh, wow, can I invest money with you, Terrence? And he was like, yeah, absolutely. And so I've seen him grow. I've invested a lot of money and time with Terrence. And now he's over like $300 million in assets. And so actually just 2 months ago, we did a webinar for him to help raise for his recent fund, the Value Fund 2. And in a nutshell, after he came up, we spent 20 minutes hanging out, did the webinar, spent a few minutes hanging out. I don't know, 3 weeks later, we handed him a close to $2 million check. He's like, wow, you know what? That webinar, that process, that was like some of the most efficient, easiest way I've ever raised money. Can we do more of it? And that was a huge compliment to us.
Huge.
Yes.
That's amazing.
All right. So let's kind of shift here and get to what we're going to do going forward. Why are we raising money for Property Llama? And what are we going to do with the money? So 2 core things we're going to do. First off, we're going to set up our own fund of funds so we can go out there and raise for Terrence Doyle's next value add fund. We can go out there and help bring capital to amazing sponsors, amazing operators like him. The second step is we got to go out there and pour gasoline on our proven marketing and sales channels that we just spent the last few minutes talking about. Now, I want to be very clear on something. We're not raising money for a bunch of development costs. We're not raising money to go out there and get a bunch of fancy office space. We're not raising money to, oh, I have this idea that I want to do something one day. No, the Property Llama tech already works. We're well past MVP. It's working. We're doing deals with people. We have our channels out there. So we just want to raise money so we can dump gasoline on the fire we've built here. Okay, so why are we working with Terrence Doyle and Verico on our first fundraise with Property Llama? Well, one, you can see some scoreboard up there that he has done. I've invested in some of those deals as well. I have walked most of those properties myself as well. Like, he's a legitimate operator. Now, here's a question. People say, well, if Terrence is so great at this, why does he need you guys to bring money to him? Why is that, Lawhead?
Well, he won't accept small checks. We will, right? So he won't take $100,000 check.
No.
What we do is we pool people's money, right? I often say strength in numbers. And so now our investors who can stroke a $50,000, $100,000, $200,000 check, now they have exposure to institutional grade investments like these. And I mean, look at this. I've been syndicating multifamily deals for many years, and Terrence is a rock star. There's the scoreboard, right? I can't stroke $1 million check, but I can stroke $100,000, $200,000 check. Well, if everybody at this table or the pool of money we put together can go get exposure to Terrence's deals, everybody wins. Terrence wins, our investors win.
And also, in exchange for that, you know, we get really preferential economics from Terrence himself in order to.
Yeah. And I mean, and people say, well, you know, hey, he's got these great deals. He should just go out there and raise money himself. Well, here's, you know, for people who have built businesses or done investments and scaled anything, you know, you can only be great at really one or two things.
And
really
passionate.
one thing, two things about, and attention.
Yeah.
And Terrence is like, all I want to do is go out there and do deals. All I want to do is do deals, do deals, do deals. And that is what he is like programmed for. And that is his superpower. And him having to, you know, talk to investors and do all that, it just takes him his attention off going out there and finding this next amazing deal to go out there and help investors go out there and get an amazing deal. All right. So the second part on here is to dump gasoline on our 3 proven user acquisition channels. So the first one is our portfolio analysis mastermind. And this is a online webinar series along with some mastermind groups and utilizing Property Llama, where we at scale help people do a real estate financial plan. They go on there and actually analyze their portfolio and help understand, hey, what I need to do to go out there and achieve my goals. I know a lot of you guys in the webinar, you've been a part of a couple ones on here. We've had massive success on here.
This is like 300 to 600 investors at a time.
Yeah.
I mean, just mass sales.
The second, this is the agent channel. And this is something that I am like so happy and like so proud they're able to work with, you know, being a real estate agent myself and growing a team, helping clients out here. Agents are great at doing deals. Agents are great at knowing the local market. And this is something that like big tech and all the Silicon Valley, they can't compete with. Cool, you can build tech, but what's real estate? Local, local, local. I don't care how good this is right now. They're not going to beat, you know, at least today or in the near future, what an agent or an investor or some of the real estate professional knows. I've been doing this for 30 years. I know what's on that street. I know what's on that street and it's coming on over there. You can't beat that knowledge. And so this is where like we do a lot of work with agents. I'm gonna loop it back around to Matt, who we talked about earlier, because Matt's an investor. And then after he invested for a while, he became a real estate agent. And once he went through his own, you know, realization, wow, I need to sell some of these properties and invest passively. He's the lights switch flip for. He's like, I gotta go out there and tell my clients out there, all these clients help buy rental properties. Hey guys, let's go out there. Let me show you this. Let me model this, because he sees it as 2 things. Number one, the most important, how can he add more value to his clients? How can he go out there and be that true trusted resource? Because that's how agents win. You be the best resource you can to your clients. Second, it generates listings for them. It's going to generate some 1031s. It's going to generate transaction volume, which, hey, as a professional, whether you're an agent or whatever, we all want business, right? But you earn business by going out there and providing value. And something I like to highlight for me, you always talk about being stewards of capital. Lawhead.
Well, absolutely. When somebody trusts you with their money, that's second to only them trusting you with their children, right? And it's something we take very, very serious. And you know, for my money, I mean, for these investments, our money's shoulder to shoulder, right alongside the investors. That's important to me. It was important to the deals we've done in the past, and certainly everything we're doing in the future. So yeah, I call it capital stewardship. And it's investor first.
Yeah. And that is what, you know, we're able to, like, we have the attitude, the agents who use this have the attitude as well. And it's just like an amazing way to go out there and just serve so many people. All right. The third channel, It is our mass media channels. We already have our established channels here that we've done in Denver. We've grown up and down the Front Range. We know what works. And we're just going to, you know what we're going to do? We're going to take that. Now we're just going to do it at scale. We're going to do it nationally. We have lots of like amazing thought leadership and other media coming out through like the Bigger Pockets channels, through other podcast channels, where we can go out there and just hit the message at scale. And that's something we've been perfecting for years. How can we go out there and first provide great value, but get that great content in front of people's eyes? So when you combine those three channels, it allows us to go out there and grow. And that's where a large part of the money we are raising to grow the Property Llama business is going. It's being funneled into sales and marketing. Again, not ideas, not development costs, but how do we go out there and put more gasoline in the fire so we can talk to more investors? So what do I get for my investment? You're out there looking at this saying, wow, this all sounds good. I know I see the trends. I see this. Okay, so if I go out there and wire money in here and invest in Property Llama, what do I get as an investor? So the first one aspect you get is you get the upside of a high growth tech company with the predictability of private real estate investing. So we got two big things to unpack there. I'm going to split it between you two guys here. So Richard, upside of high growth tech company. What is that and how those play out typically?
So typically the way those play out is that the market values the equity of these companies very generously, and that's because they grow very fast. So saying something like, oh, I'm going to pay 30x revenue, but you're talking about a company that is doubling every year. And then suddenly in 2 years, you're like, that's like a 7x revenue when the market's trading at, you know, much higher than that. You're getting a really good deal. And so people are paying for the growth, and it makes it so we have some case studies towards the end. But if we just continue on the path that we're on, the upside potential in owning the stock is enormous. And that companies which have relatively, like historically, companies which have had relatively modest assets under management doing businesses like us have been valued at like $250 million in their second year.
Yeah.
Like, and we'll get into that in a second.
Yeah, and so that is a tech component where it just has high growth, high potential. I mean, we all know, you know, Facebook and all those, but for every Facebook, there's 99 companies you don't know about. And this is where like having it packaged with private equity becomes such a powerful thing. So Lawhead, when we talk about private equity, why is that such a powerful and predictable business model?
Well, it's investments in real assets, real dirt, real structure. Right? You're betting on the fact that living indoors will remain popular, right? You take Verico, for instance, Terrence. What's he doing? He's doing apartment buildings, betting on the fact that living indoors will remain popular, right? A top tier operator, operating in something that everybody needs, right? So it's real property investing on real assets paired with the tech component. I mean, it's a perfect marriage.
All right. So we've had this question. We talked to people the last couple of weeks, and it's I know a lot of people like, hey, we're combining the two. It's absolutely powerful and why we are so excited. So the first thing with your investment is you get to be on the ground floor of a fast growing company with a proven business model using real assets. The second thing is investors in Property Llama get exposure to every single fund and every single deal we do in the future. They get a slice of it. And so here's a graph just showing, hey, when we do deal 1, deal 2, deal 3, fund 1, fund 2, fund 3, that flows up to ultimately the shareholders of Property Llama. So one investment gets you exposure to a whole bunch of investments, which is freaking phenomenal in my mind. All right, so to talk about investing in Property Llama, you get to become part of a business with a proven success formula while it's still in its initial early phases, and you get a slice of every investment we ever make. All right, the third thing, you're eligible when you invest and deal with us to invest in the founder stock class and all future funds. So like when we go out there and let's say we were doing Verico 3 or Verico 5, looking forward in the future here, we're investing our dollars alongside our investors as well. We are investing and we invest as the founders owners class. And people who are also investors in Property Llama, guess what share class you're investing in? The same stock class that we are. And so that's just essentially the lowest fees and the best stock class. Anything you guys add on there?
I mean, the most important thing for me as an investor, as an LP, is that the GPs I'm investing in put their own money into the deals.
Yeah.
Right. So let's be very clear. These deals that we invest in, we put our own money, our family's money into these. It's essential.
Yes. All right. So as a Property Llama investor, you're a front row seat as an early investor to our fast growing startup. You get participation in the GP fees and upside in all the deals we do. And you get to access the most cost-effective fee layer when we invest in our funds. All right. And this is for the deal junkies out there. You're going to love this. You get first look at the deal. So when it comes time, hey, we've got a deal coming up in the pipeline, you get first access, you get first look to it. And so what that means is, hey, a lot of the deals, great. You know, we don't have too many constraints, but sometimes for like amazing deals or whatever we can get, you know, put together, man, we have a certain amount of capital we can raise for it. And it's an amazing deal. Well, usually there's more capital than space. When you've done deals in the past, Lawhead, talk about what you've seen there.
I mean, we've already seen it where deals have been fully subscribed before everybody could get in. Right?
Yeah, twice in the last year.
Yeah, twice in the last year. And when you miss out,
and that was in like a couple days.
Right. And we'll take Matt, for example, right? Matt's one of my best friends. We go skiing together. All we talk about is this stuff. And when he gets into these deals before I do, and then I can't get in, I am a little jealous. Matt, if you're listening, you know this. So yeah, having exposure to these deals prior to, the thousands of people on our email lists and the tens of thousands of people in our channels, that's serious.
Yeah. All right. So as for people that end up investing in Property Llama, you get the front row seat to be an early investor in our startup. You get participation in the GP fees and upside. You get access to the best share class when we present deals in the future, and you get first look at deals we put together. And so now we move into how much money we're raising, and Richard's going to walk us through a couple great case studies to help benchmark things.
Yeah. So this is a company here called Flock Homes. They're actually based here in Denver. So this is 2 years after they launched, I believe. And according to the press release, which was published on TechCrunch, they only had about 110 homes in their portfolio, which from an equity position, we figured that that's about $30 million of equity. So a third less than we raised for Ironton last year. And they raised 26 million. And so in a VC deal, you're commonly selling 10 to 20% of the company. I would say during this period of time, it was probably more like 10. And so this puts an implied valuation of between 130 and 260 million. Of course, note, this is my own reckoning of what I think their valuation is. And this would be very common. I'd be highly surprised if it was out of this range. And so we can go to the next one.
But they're a tech company merged with private equity.
Well, yeah, exactly. They have their own fund. It's called an UPREIT. The returns are pretty poor, in my opinion. We can do way better. And next one we have here is Cadre. And this one's really incredible. So this was a 3-year-old startup, which got to a valuation of $800 million in 3 years. This is according to the information. If you're in the tech industry, the information is a very reputable news source. So who was in this round was Goldman Sachs, among many other huge funds. So yeah, I mean, there are lofty heights, and the reason both of these companies are able to justify these valuations to tech investors is because they just have more scale, and they have scale to take in capital as well as get the product in front of way more people than your average private equity firm, which has 3 IR reps, and they basically get all of their investors from their kids' private school and the golf club. They don't
have the scale.
Yeah, they don't. So what we're looking for here is we are doing our seed round we're trying to raise $3 million at a $30 million post-money valuation. Let me unpack that. That's a technical term there. And we're raising it through a SAFE. So what is the post-money valuation? That just means that the way that you calculate the price of a share, times the total outstanding shares value of a company, that just means after we sell the 3 million in shares post-dilution, the company is worth $30 million. Yeah. That's just one way of expressing it. Or it's worth a valuation cap, so it can be worth up to $30 million. So what the SAFE does is this is a simple agreement for future equity. It was created by an accelerator in Silicon Valley. Very well done. I'm sure half of you on the call already know who Y Combinator is, but for the other half, they are the premier school for really high potential startups. Just incredible returns, legends. And so this is a vehicle which is a lightweight contract very simple to understand, and also gives a lot of downside protection for the investors.
Yeah.
So this means that if they go to,
well, here's the bottom line.
Yeah.
You can get into technical details there. I just realized it's a common way companies like Airbnb, DoorDash,
Yeah.
Dropbox, Instacart, Reddit, a lot of other household names, this is the way they have raised money. It's just a very simple way to do it.
it's by far the most common way for companies like us. Yeah.
So, and then again, what we're doing the proceeds for, it's what we said. We're gonna go out there and launch our own fund of funds to go out there. And we're gonna do that with Verico and Terrenceville first. We're gonna go out there, execute it. And we already have a building waiting list of other operators and sponsors that want to get on track. And we have a very high selective criteria for who the right fit is, that we have to look, hey, we invest ourselves in here, what makes sense for our clients. But it's going to be launch your own funds. And then secondly, go out there and just scale our direct marketing efforts through those 3 channels we talked about. So we can talk a lot more details about in the safe contracts, details of the model and all that.
Yeah, we'd love to talk to you.
One-on-one after the call here. We love talking this stuff, and we'll sit down and, getting the details with everyone. But we'll end on this to keep it, very, very simple. It's all about the community. 6-7 years ago when I started on here, I've always been a community first grassroots person. And I think when you look at real estate, you have to come from a bottom up approach. This is why so many companies in tech have a hard time getting into real estate, because real estate is local, and it is local with humans. And that is something that does not scale at mass through just, one tech platform. And so, the success I've had out here as an investor, a broker, a podcaster, raising money for Ironton and Verico, it has been all through the community. And not just in terms of meeting and networking, learning from people, in terms of gaining clients and gaining the privilege to sit down and say, hey, let me sit down, meet with you and look at your portfolio, understand your goals, and get the blessing to go out there and help you buy a property or place a capital. It's a huge responsibility, a huge honor for us. We've had that. And also, most of our team, from Envision to Curtis Street to Property Llama, we have recruited from the community. Like, wow, I see what you guys are doing. I love the vision. I want to be a part of that. And so we come back here and look at, hey, how can we grow Property Llama? How can we go out there and just, get some money to dump gasoline to grow this? We realized it started with community, and we have to come full circle back with the community as well, because everyone in the community has been a part of the ride so far. We want you to even be more a part of the ride. And going forward, we want you to be able to be part of it and be able to enjoy the benefits, because ultimately, real estate is a community-focused platform or community-focused industry. And that's how we want to grow.
I mean, I can't second that strongly enough, right? We have to honor the relationships that have brought us here for the last decade, right? We've done combined hundreds of millions of dollars worth of transactions. People have invested in our syndications. We've lent them money. They get first crack of that. And I know we have some institutional interest. I get it.
Yeah.
And we'll certainly listen. But those people that have brought us to this point, they get first crack at this. That's super important.
Yeah, that's how just a strong feeling we have, and the community's gotten us here, and the community's going to take us 10x, 100x.
Right.
That's the way it's going to go. All right, so 2 options up here. If you guys want to go and reserve your spot and book a time to come down and talk with us, scan that QR code or go to denverinvestmentrealestate.com/PL. I'm going to drop this into the chat as well, so everyone can see, and just click that link in there. Or if you have any questions, reach out to me. I mean, reach out to Lawhead and Richard as well. I know a lot of people know me, so you can email me, Chris at Property Llama. Shoot me a text message. I know a lot of you guys have my phone number. We're always happy to sit down, go through questions, and just, lay out the plan so you guys can understand it. And so we would, first off, we are greatly honored that you guys gave us 45 minutes of your time to come learn about Property Llama, the vision and the business plan on there. So thank you. A second, for everyone out there who has watched it, has questions or whatever you have, we are grateful for that. We would love to sit down, grab a cup of coffee, hop on a phone call, whatever it is. We love being transparent. Do not hesitate to reach out. So again, scan that QR code to go to denverinvestmentrealestate.com/PL. Fill out a simple form to get you plugged into everything. Or you can email Chris at propertyllama.com. Now, in the off chance you email us, don't hear back, call me again or whatever. We want to reach out to everyone. But that is what we're here for. Awesome. Well, Chris Lawhead, thank you.
Thank
Richard
you.
McGurr, thank you. It's been an amazing ride up to here.
Yep.
It's going to be an amazing rocket ship the next couple of years.
Yep.
Everyone out there in the webinar, thank you, thank you, thank you. We look forward to talking to everyone out there very soon.